folks, Tim Frio here, the rate update, and today we're going to talk nothing but credit. I get so many phone calls on a daily basis that are like, Dan, I don't want you to pull my credit because you're going to, my credit scores are going to go down. Or, why is your credit score different than mine? I pulled my Discover account and I got a 700 credit score and you're pulling, you got a 680. Why is that? Well, I figured I'd go right to the horse's mouth. I got Spencer on from National Credit Care. And the reason why I asked him on here is that to answer those questions, that's what he does for a living. I've done mortgages for 30 years, but there's still things in the credit sphere that I don't know. So thanks for coming on, and hopefully we'll debunk a whole bunch of this stuff.
Absolutely. Thanks for having me, Dan.
Sure. So tell everybody, what do you do?
So basically, National Credit Care, we are a credit repair company. We specialize in working with mortgage lenders, real estate professionals, in helping their clients get their scores up to qualifying for a mortgage, whether it's getting them just qualified or getting them that higher interest rate. We have the ability to get literally any negative item that's on your credit report removed, whether it be a paid collection, a paid charged off credit card, a charged off credit card, or a collection with a balance, repossessions, foreclosures, bankruptcies, you name it. In the 12 years that I've been doing this, there's literally nothing on a credit report that I've seen that we can't get removed.
Okay, got it. Well, I'll just be transparent. I've been doing this for 30 plus years. And I'll say this: I've kissed a lot of frogs in the credit repair side of it, and there's a lot of people that spend a lot of money, doing this. Mm-hmm. So I was glad that you reached out because I actually have used you in the past, and things went very well, but we kind of missed, did have our paths haven't crossed lately. But I'm glad you reached back out because we have a lot of clients that could use your help. Let's go through and start to hopefully debunk some of these things, and then you could kind of fill in a little more elaborate into the questions that I got, I guess. So I just wrote, and that's why I'm looking over here, is I have some questions over here that I have. These are the common questions that I get. So the first thing is, how many credit scores are there? And the reason why I ask is most of the time when you ask somebody their credit score, they'll be like, it's a 720. And I know this, but most people don't know this. I try to educate them saying, you got over 30 different credit scores. And most people have no idea that part of it. They think they have the one score. So you explain it.
All right. So the Fair Isaac Corporation, otherwise known as FICO, and I'm sure you probably get a lot, my FICO score is this. There's 57 different FICO scores. So there's basically 57 different ways that the Fair Isaac Corporation can calculate a score for lending purposes. The Fair Isaac Corporation is who dictates what lenders can lend upon. So if you go to Credit Karma, you're going to see a score, but Credit Karma doesn't lend you any money. You go to Credit Sesame, you go to Lending Tree. Even though Lending Tree, it sounds like they're a lender, they do not lend you a single dime. So they're going to give you they're going to give you a score that they basically calculated on their own, but it is not a lendable credit score. So there's 57 different FICO algorithms. For the purpose of a mortgage, there are 3 specific ones: Beacon 5.0, Classic 04, and FICO version 2, which is really, really uninteresting. But when it comes down to how they calculate that score, they're basically taking a comprehensive look at your entire credit history: auto, credit cards, previous mortgages, rental, leasing, the whole 9 yards. So they're encompassing your entire credit history to figure out exactly what kind of a borrower you're going to be and what the likelihood is that you're going to default, or you're going to be a perfect borrower and you're going to repay this loan on time.
Got it. I just learned something just now. I thought that there was 36 different scores. So I learned something as well. All right. Awesome. Thanks. That was huge. What causes my score to vary? I know this is a Pandora's box, but just try your best on, why would one score, let's go down your avenue. You have 57 different scores. Why would one score maybe be a 750 and one be a 680?
Well, even so, even when we're looking at the three different algorithms that are used for mortgage scoring, TransUnion, Equifax, and Experian, they all weigh different aspects of your credit history differently. So for example, Experian, they might take a look at a late payment on your auto loans from 2 or 3 years ago. They might weigh that a little bit more negatively than, say, TransUnion or Equifax would. They're also going to look at, say, your credit card history and your credit card balances. So Equifax, they might look and they see that you've got 3 credit cards that are almost maxed out, but you've got 5 that are below 10%. They're going to score that a little bit more favorably than, say, Experian, where they say, well, we don't really care if he's got 5 credit cards that are in good standing that are below 10% of their limit. What about these 3 that are damn near maxed out? So that's one of the main reasons. They're looking at different aspects, and that's why we have 3 different scores, and that's why you end up taking the middle score because, some people, they've got, a 760 high score, and their low score could be a 702 when their middle score is a 723. So that's why, it's a comprehensive look, and they all score it differently. I don't know the exact reasons why each of the 3 bureaus score and weigh different things more heavily than others, but they just do, and I don't know if that's ever going to be found out, but as soon as I do, you'll be the first to know. Trust me on that.
The crazy thing is every once in a while we'll pull up somebody's score, and I don't see this a lot, but the variance is sometimes huge, meaning sometimes we'll have a 780 on the one and a 650 on another score, and it's like, no. But I know, I'll tee that one up for you.
The other reason that could be is that different credit card companies and different creditors in general, they will report to the bureaus at different times. So I know that oftentimes TransUnion, they will update their scores with the bureaus before Equifax and before Experian do. So that could be one of the main reasons. So it really does come down a lot to timing as well. For example, with credit cards, even if you've got a credit card that you use every single month, like for me personally. Prior to COVID, I was traveling 2 to 3 weeks out of the month, and I would have a maxed out credit card at the end of every single month, but I would pay it down to a 0 balance at the end of that month. But when you look at I would pay it down when the bill was due. But the problem is they had already reported that I was maxed out to the credit bureaus. So it looked like I was an incredibly irresponsible borrower because every single month my credit card was maxed out. So what I recommend doing is if you know that your bill is due on the 28th, as soon as it shows that your bill is due, whether if you've got online, with Capital One or Discover or American Express, as soon as it says your bill is ready to view, go online and pay that thing right away so that it is not going to actually show that you do have that maxed out card, and my recommendation is keep it below 10%. Rule of thumb with credit cards is below 50% of your limit is good, below 30% of your limit is better, below 10% of your limit is the sweet spot that you really want to stay in.
Got it. Cool. All right, we got that one. Why isn't my this might be, I'm just reading off the thing, so we might cover it in one little section, but we'll just skim through it. Why isn't
I jump around all the time, so don't worry.
I am. Why isn't my Credit Karma score the same as the score my mortgage company is getting?
So Credit Karma is using a Vantage scoring model. The Vantage scoring model came out, I want to say 5 or 6 years ago, and it's Vantage 3.0. It is not Fair Isaac Corporation approved. So it's basically just a calculation that they come up with where they round up all the information that they have and they just, boom, they plop out a score for you. It typically is going to be anywhere between 60 to 70 points inflated, unless this is where it gets kind of tricky. So if you look on Credit Karma and it shows you've got a 490 credit score, you're probably closer to a 540. But if it's showing you've got a 670 or a 680, you're probably closer to a 600. Credit Karma is, if you'll notice when you go on there, every single time you go on there, what are they doing? They're advertising a brand new credit card that you could get. They're advertising credit repair. They're advertising debt consolidation. They're advertising a new personal loan that you could get. So it is a free service, but they are steering you in the direction of get this credit card, get this personal loan, go into debt consolidation, get into credit repair, whatever it may be. So they really have no reason to show you your actual scores, and they don't even have access to it. The only way that you can truly get your actual mortgage credit scores is by having a lender like you pull it, or go to myfico.com. You pay the $29, and you're actually able to access all 57 different algorithms.
I have that link down below because I always tell people, I said, if I pull it, and I'll get to this part of it too, because a lot of people are like, I don't want you pulling my credit. I'm like, well, here's my analogy behind that. It's like you tell me your car won't start, but you're like, you can't look under the hood. Well, you're asking me for $200,000 or $300,000 to lend you, but I can't see your credit. So do you pay anybody? That's my analogy. It's like, well, don't look under the hood, but it won't start. So what's wrong? Well, is there an engine in there? Well, I don't even know if you have an engine. You get what I'm saying? So does anybody lend off of the what's credit card?
Credit Karma scoring model.
What
Vantage?
Yeah,
nobody does.
I didn't think so. Okay.
Nobody will lend off of that. Nobody will lend off of Credit Sesame, off of myfreecreditreport.com. Even if you go to the actual credit bureaus themselves, this is kind of interesting. If you go to Experian, if you go to TransUnion, if you go to Equifax, they're going to give you their own scoring model. Now, they might give you FICO Model 8, but when it comes to, so I'm sure that you've probably seen it plenty of times, somebody comes in and says, I just went to Experian, my Experian score is a 670. You pull their credit, and it's a 625. Reason behind that is because we don't know which algorithm the Experian is giving them. Or if you go to CreditWise or My Credit Journey on Chase, whatever it may be, they're giving you, typically it's going to be a credit scoring algorithm or an auto scoring algorithm. It's not a mortgage scoring algorithm. So the only true way, again, to get to know what your actual mortgage score is going through you, or going to myfico.com and ponying up the $29 a month so that you can see it.
Got it. Cool. All right. This is all over the web that I see on YouTube. Don't pay off collections. You're up.
All right. So the reason that you don't want to pay off collections. So paying off an old collection is essentially reopening an old wound. A collection is essentially the same thing as if I were to take a knife and I were to just cut myself, or, I'm, chopping onions and I slice my finger up open. I go to the hospital, I get it stitched up, for a week. It's in a lot, I'm in a lot of pain. After about a month, it's not hurting very bad at all. A year down the road, I barely even remember it. I just have a simple scar on my finger. I go back in and I repay that collection. I'm basically taking an X-Acto knife and cutting right along that same scar that I had. And even if you're paying it down to a zero balance, the misconception that a lot of borrowers have is, well, I'm paying off an old debt, I'm doing the right thing. And that's because they're using logical and rational thought. However, the credit bureaus, they do not use that same logical and rational thought. When you pay off an old collection, you're reopening that old wound, and now they are scoring it as if it's a brand new collection, just with a $0 balance. The big problem is with the credit bureaus, there's no wealth discrimination. So a $0 balance collection with a date of last activity of today carries the same negative weight as a $5,000 balance collection with a date of last activity of today. And the date of last activity is just the last payment that was made on it, or the date that it was opened if there's never been a payment made on it. So paying off an old collection is not good, but there are a few scenarios. A couple of different collection agencies out there, if you call them up, if you've got a $210 medical collection, you call them up and it just hit a month ago, call them up and say, hey, I'll pay you the full amount, but I want a letter of deletion. Not a letter of satisfied, not a letter of paid in full, not a letter that says that you have a zero balance, but a letter that is stating they are going to delete it from the credit report. That is the only way that I would ever advise one of my clients to pay off a collection.
How often are they receptive to doing that? Most collection companies or medical collections?
On medical collections, quite often, and there's a couple of them that are more prevalent to, or more prone, I guess you should say, to giving letters of deletion. And I've got a list of them that I can send over to you. LVNV funding is one of them. Portfolio Recovery Services is one of them. They'll actually do settlements and deletion letters as well. But and I've probably got, I think there's like 25 or 30 that we know for a fact will do it. But I've seen collection agencies that are notoriously known for not doing it. If you call them up and you're able to get the right person on the phone, they'll give you a letter of deletion.
Got it. Cool. All right. Here's the one that always pops up. does my credit score drop every time a mortgage company pulls my credit? So what will happen is they'll go to Quicken or they'll go to wherever, and then they'll call me and say, here's what they got. What can you do? But don't pull my credit because I know it's going to affect or drop my credit scores.
Mm-hmm. So the myth about the shopping window, it really is a myth. As far as, having your credit pulled as many times as you want over, a 2-week time frame or a 3-week time frame, that's actually only one specific version of TransUnion's algorithms that will actually do that 2-week shopping window. So my advice is if you go and get your credit pulled and you get turned down and you go to another lender, that lender is going to turn you down as well. If you go from Caliber to First Centennial to Guaranteed Rate, and then they finally stop at you, what you pull is going to be lower than what they initially pulled when they first went to Caliber or whatever mortgage company, Quicken, whatever it may be. That is what they're going to see that, just because, every time you have your credit pulled, it is going to ding you, especially if it's a hard inquiry.
Is there a point factor in there, or is it just random?
So when it comes to the effect that a hard inquiry will have on your credit, it really is based upon how high your credit score is. If you've got an 800 credit score, you could be looking at a 7-point drop, a 5 to 7 point drop on every inquiry. If you've got a 520 credit score, you might only be looking at a 1 or 2 point drop every hard inquiry. It's kind of like, somebody who makes $250,000 a year, Uncle Sam is going to take a whole lot more out of their paycheck than somebody who's making $18,000 a year.
Got it. Okay. The bankruptcy piece, I heard all kind of rumors one way or another on this, but how long does a bankruptcy show on your credit?
A Chapter 7 is going to stay on your credit report for 10 years from the date of filing. A Chapter 13 is going to stay on for 7 years from the date of filing. I've heard it a lot of times from a lot of different lenders that I've worked with that it's 10 years from the date of discharge and 7 years from the date of discharge. That is completely false. It's from the date of filing, 10 years for a Chapter 7, 7 years for a Chapter 13. Now, keep in mind, we can get those removed well before the statute of limitations is expired. Any negative item, any late payment, any collection, any charged off credit card, any repossession, any foreclosure, those are going to stay on for 7 years as well. But again, that's where we can come in and we can get them removed prior to that statute of limitations hitting.
Gotcha. So if somebody filed a bankruptcy, do they have to do anything to get that removed, or is it automatically purged through the system? As soon as it hits 10 years, it actually purges?
Ideally, it's supposed to just be removed at that 10-year statute of limitations. However, I can't count how many times I've seen it where there will be a 12-year-old bankruptcy that is still sitting on a credit report. And the reason behind that is, according to the Federal Trade Commission's audit that they did of the credit bureaus a few years back, they found that 80%, not 8 or 18, but 80% of all credit reports have errors on them. Errors in reporting, just like the bankruptcy that I was just talking about. A 12-year-old bankruptcy, it should be gone from the credit report, but it's still showing on there. That is an error because the credit bureaus, they did not update it, and they did not basically follow through on what they should be doing.
Is that still playing a factor in their score? Let's say it's a bankruptcy from 10, 12 years ago.
Absolutely, and it's going to cause a problem in underwriting as well.
Okay. Got it. So it does take, okay. This is a completely wide open question. And I know we could probably talk 3 days on this one, but what's the best ways to improve your credit scores? Because you see all these things, fix your credit score in 24 hours or get an 800 credit score in 30 days or stuff like that. What's the real truth behind how to improve your credit score on your own the best you can?
So the best way that you can do it is credit cards. Credit cards they make up 30% of your entire credit score. So, I've heard it said many times before, go to your bank and get a personal loan. That's going to give you good, payment history. It is, but the problem is that an installment loan doesn't carry as much weight as a revolving account does. And the reason behind that is, I'll give you an analogy. So, you've got a gentleman over here. He's got a $5 million mortgage on his credit report. That's the only thing he's got on his credit report. He's had it for 5 years. The other person over here has a $500 limit credit card. It's the only thing that he has. He's had it for 5 years as well. He keeps his balance below 10% of his limit. Who's going to have the higher credit score? The $5 million mortgage guy or the $500 limit credit card guy? The $500 limit credit card guy is going to have the higher credit score because with an installment loan, there's only one way that you can be irresponsible with that, and that's by missing a payment. With a credit card, there's two ways that you can be irresponsible. You can miss a payment and you can max out that card. So when you get a credit card, basically a company is giving you access to money of theirs. And if they give you a $500 limit card and before you know it, you've got a $475 balance on it, that does not make you look very responsible at all. You could be paying it on time, but you're still not actually showing true responsibility when it comes to how you're using that card.
Sweet. You answered all my questions. That was awesome. So what I might ask you to do is if we can maybe do this like once a month, and as people comment down below, we can go then and I can put those in another format. We can come back a month from now, answer all those questions. So the whole gist of why I do this channel, and I have multiple videos, pieces that I do on a daily basis is, I do like a stock report and a crypto currency report and all this. I'm not a stockbroker. I'm not a wealth advisor. I don't buy and sell this. I don't have any skin in the game in that. If people are out there for a mortgage, I'd love to help. But my whole gist of all this is just to educate you guys on, and you can follow what I'm doing, like in investments and such. But there's so much misinformation out there, and there's an agenda to people, in most of the YouTubes where you go below and they're trying to sell you everything and anything, and it's clickbait and so forth. What I try to do is just get out there with the facts, with no skin in the game, no dog in the hunt. It's just like, here, guys, here's the facts, and there's no agenda behind it. So what I'm going to do is I want to thank you so much for joining us today. I'm going to have all of Spencer's information down below as well. I'll put a link down below as well if you want to start on his program. Tell us a little bit about what exactly do you guys do? How long of a time duration does it normally take for somebody to get their credit scores? I know everyone's a little different, but a standard person that comes in with a 600 credit score and they need a 640 or 680, what are you looking at, like time frame and some just generic things that will be done to their account?
That's a really great question. I wish that there was a simple answer that I could give you. If somebody's got a 600 credit score, and the reason that they've got that 600 credit score is because they have one late payment that just hit last month, that's going to take a little bit of time. I mean, that's just the reality of it, because a late payment from last month, even with us and our investigation and verification procedure, which we can get literally any negative item removed from the credit report, getting that late pay removed from last month, I'm going to try and educate the borrower on what they can try and do on their own, whether it be calling up the credit card company or the auto company that they got the late payment on and trying to get a letter of forgiveness. But on average, most of our clients are with us anywhere between 3 to 6 months. There is no contract for our program. So, if you're just trying to get qualified, a lot of our clients, they're qualified in 2 months. But they're also realizing that right now we're in a climate where we've never seen interest rates this low for mortgages ever. So, people are looking, it's like, hey, I've got a 660, but my lease isn't up for another 3 more months. I want to stick around for another 3 months so that I can see if I can get up into that 700 range so that I can take advantage of these historic low rates. But I guess, my long story short answer to that would be 3 to 6 months is an average time frame. However, every single client that I talk to, the very first thing that I'm going to do is I'm going to give them a consultation. I'm not just going to tell them what it is that I do. I'm going to get to know what their situation is, what their goals are, what their time frames are. And then I'm going to give them realistic expectations and what our game plan is. I lay out a full-on game plan for them to do on their own prior to me ever saying, this is what we can do on our end to help you. I want to have them fully aware of what they're capable of doing on their own before I start jumping into this is why you need to hire us and this is why you need to get into our program.
Yeah, and most people don't realize it's not just the mortgage piece. I mean, might affect you getting a job or not. what your insurance premiums are going to be, what your car interest rate's going to be, what your credit card rate's going to be. I mean, it affects all kind of pieces of your life that people just don't understand. And that's what we're trying to fix here. So I want to thank you again for joining us. Guys, I will post all the information down below so you can reach all of us or any of us that you need to contact to get some help. So thank you again. Look forward to having you next month. But please, guys, comment down below so I know what questions to ask you next month so we can cover all your questions and get the facts. Take care. Have a great day. Bye-bye.
Thanks, Dan. Bye.